So in the last game plan that I posted, I made it very, very clear that once the market hits new all-time highs, it's likely going to come crashing back down. So if you see the SPY forming red, bearish 30-minute candlestick confirmations, you're going to want to be buying put options. I even mentioned in the video in terms of measuring the overall all-time highs, I said the SPY has been on a pattern where it spikes 2 points above the new all-time highs, then it comes crashing back down. And if you looked in the pre-market, it literally topped out at one of the levels I mentioned, which was 575 in the video, measuring the move. And in the pre-market, there was so much resistance. And there was many red bearish and many trend reversal 30-minute candlestick confirmations in the pre-market and into the market open. So if you had followed that game plan, losing should have been a personal choice. Now, with that being said, in terms of the overall market recently, it's been very slow and it's been very choppy. In terms of last week, Monday and Tuesday, I ended up having 3 trades. 2 were losses. 1 was a very nice win. I ended up top ticking the SPY, buying put options towards the exact lows when the SPY was at the highs, during a very challenging time of day in a very slow and overall choppy market during the middle of the day, making a 100% profit return at the speed of light. And then Wednesday and Thursday and Friday, things started to pick up for me. I ended up making multiple 100% profit returns during the power hour trading session, nearly going flawless each power hour trading session. I absolutely crushed it later into the week, man. If you witnessed the trades that I made in terms of later into the week, every single time during the power hour trading session on the last 30-minute candlestick, I was buying call options, nearly bottom ticking the SPY towards the exact lows of the 30-minute candlestick, making 100% profit returns on call options 3 times in a row, Wednesday, Thursday, and Friday on that last 30-minute candlestick, right? So in terms of a very slow and overall choppy week, the market truly tested our overall trading strategy, which is to buy cheap, low-risk, far out money option contracts, hold them for the bigger wins, and sell in the money. It's a very challenging time to be trading those in terms of slow and choppy market conditions. You're going to want to sell for quicker moves, and you're really going to want to focus on just trading during the volatile times, which is going to be the market open session and the power hour trading session. Now, that was a true test for us with our trading strategy, and I was very disciplined and I was very patient, and I absolutely crushed it last week. Now, with that being said, let's get into the new money making game plan. So it's going to be very short and simple. This is what I have to say. Based off of the daily chart pattern that I'm seeing, I'm not going to get too in detail in terms of what is that I'm seeing, but basically I'm looking at this like 3 slanted red bearish overall pattern on the daily chart. And I went back throughout the chart history and just looked for similarities along with this daily chart pattern that we're seeing. It has to do with the last 3 days on the daily chart. And this is what it's telling me. I have a very strong opinion and bias heading into the market open tomorrow. If we gap up, if we are opening up flat, or if we are gapping up above 571.47, I'm going to be extremely long biased and extremely bullish, right? That's going to be the thesis. Now, obviously, that's just a foundation. There's going to need to be levels with that thesis, and then there's going to need to be confirmations that I stack at the overall levels for me to actually execute, you know, the overall thesis and bias, right? But in terms of the foundation, it's the daily pattern. Then we have the levels. Then we have the stack and confirmations at the overall levels, along with the intuition and just waiting for bull and bear traps to get created. It gets a lot more advanced. But based off of what I'm seeing, if the stock market gaps up or opens up flat, we're going to have a strong bullish closing day to be day trading call options. And on a bullish trend day, you guys know the strategies that we like to take advantage of, the break and retest. When the SPY breaks above a key level, a key resistance level, and it comes crashing back down to test, and it's reacting as a support level, it's forming the bullish or trend reversal 30-minute candlestick confirmations. When it retests for the first time, we're going to be buying call options, right? And then also just using key levels to buy key oversold dips on, right? Not just the break and retest, right? Those are just some of the basics. Then we have the gap reversal. We have many other trading strategies. But based off of what I'm seeing, if we gap up, it's going to be a very strong bullish closing day. So this is the game plan. If the SPY opens up flat or gaps up, it's going to be very, very simple. The first level I'm going to give you is an oversold level. Now remember, this is only going to be relevant if we are opening up flat or gapping up. So in terms of the lower oversold level, it's going to be 570.40. We have a lot of key support right here at this 570.40 level. A lot of nice bottom wicks on the overall 30-minute chart. That's going to be the lowest level, meaning if the SPY gaps up or if it opens up flat, if it ends up dropping towards that lower oversold level, I'm very interested in buying call options. But again, for that to be relevant, it has to open up flat or gap up. If it doesn't do that, then I'm not really too interested in buying call options at that level, right? Now, in terms of other levels, so that's going to be your lowest key oversold support level that I'm interested in buying heading into tomorrow, right? In terms of the next level, it's going to be the gap. If we are opening up higher than 571.47, I will be looking for a gap reversal confirmation at that overall level. And if you get in there and it works against you, you can try to average your cost down a little bit at 570.40 because it's likely going to reverse at that level if we do end up gapping down, right? But if you're seeing confirmations at the higher level at the gap, you can try at that level as well, right? They're not too far apart, so you can average in a sense. Now, the next level is going to be your resistance levels. So I gave you the lowest oversold level, in my opinion, that we could drop to if we are gapping up and ends up dropping, flipping green to red. And I gave you the gap level. Now, these are the resistance levels. So in terms of the resistance levels, you're going to want to use the breakout and retest overall strategy. So if you see the SPY break above these resistance levels, 572.30 or 573, those are going to be the lower resistance levels, right? You can see there's clear resistance at 574. Well, we're targeting the lower resistance levels, the more oversold ones, right? We don't want to chase and chase and chase. So 572.30 and 573. If we break above those levels, SPY drops back down, you see the trend reversal, bullish 30-minute candlestick confirmations, buy call options for the breakout and retest, right? If we end up gapping up, we're going to be on pace to go to 574 to 575 heading into tomorrow. That's the game plan. Now, if we are gapping down, or if the SPY goes under this 570 level, the bears are going to start to take full control. Based off of the daily patterns that I'm seeing, I don't have too strong of an intuition or bias on like being so hyped to be buying put options. Again, in terms of the game plan and the patterns in this video, that main focus is on the gap up. So what I'm telling you is this is more of just levels a day before now, right? So I gave you the strong opinion. I gave you the strong bias. I explained to you what needs to happen in order to execute that idea. Now, in terms of this is just more overall levels, right? In terms of making these videos the day before the market opens, I'm not always going to have a strong opinion or a strong bias or a strong foundation because I'm working with what it is that I know works for me, and the market has to give it to me, and it's not going to give it to me every single day. That's where having discipline and patience to sit on your hands really comes in, right? So in terms of what I'm saying right now, this is more just levels, nothing too special. The special information, that's if we gap up. So I don't have too much of a strong opinion if we are gapping down. But for the bears to take full control, we need to go under 570. So again, this is more just key levels. And then with key levels, you can stack in terms of what works for you at the key levels, right? It's just that strong intuition and that strong overall bias and game plan is on that call options, but we got to gap up for me to really execute on that overall play. So bears take full control if we go under 570. The next level below that is going to be 568.50. The next level below that is going to be 565.30. And then the next level, this is something that I'd have a very strong, this very strong level of interest, 561.50, a very key low oversold gap for a gap reversal. Very interested in buying call options at this level right here towards the bottom of the channel that hasn't been tested in a sense at the 561.40. So that's the overall levels. That's the overall game plan. Use that to profit into the market. The level is going to give you a better sense of overall direction. But like I said, man, in an ideal world, in terms of this video, the true strength would be if the market gaps up and we're buying call options at those levels. Other than that, it's more of just levels, nothing really too special. So, hopefully the market gaps up and hopefully we get that pattern. If not, then we'll just, pay attention to the levels of interest. We'll wait for bull and bear traps to get created. We'll wait for something further on to develop throughout the day. Like I said, man, the discipline and level of patience is at all-time fucking highs, man. You should have seen me last week. I'm telling you, man, when the market gets slow like that, it's going to test a lot of traders. It's going to test your strategy. I mean, with my strategy, when you're holding for these bigger wins on these 0-date options, you know, it could really hurt the strategy in a sense if you're not trading during volatile times in a very slow and choppy market. That's why market open and power hour is very, very important, because it can help combat the slowness and the choppiness, right? But the contracts are still going to be cheaper, which is good. When the market's slow and choppy like that, the contracts tend to be cheaper and you don't have to go as far out of the money. So you just have to do some adjusting. But in terms of holding for the bigger wins, that's where it has one of the biggest impacts. You're not going to be able to hold as long as you normally would. So you have to adapt. You have to go a little bit closer to the money and you have to sell for the quicker wins in an overall sense. And you really just kind of want to focus on trading during those extremely volatile times and trading a lot less. You know, it's best to do what's working for you instead of just jumping around. You know, some people when the market gets slow and choppy, they might jump back to another trading system. You can do that. It's just you have to adapt and rewire your brain accordingly, right? If the market's saying, you know, slow and choppy, then in a sense, people might be going barely out of the money, or they might be going in the money and just selling for very quick fucking moves, right? You can do that. It's just you're going to have to adapt and you're going to have to rewire your brain in a sense, and that can throw you off course in terms of the whole overall year. If you have a system that works very well year round, you should be able to afford, if you have an account big enough, you should be able to afford 1 or 2 red months, right? So it's just some things to think about. But in terms of adapting, you want to adapt in a sense. But I'm telling you, just being patient, being disciplined, waiting to trade the best setups at the best prices, trading less, doing less, being very patient, being very disciplined. If you want, you could try some old systems that work well for you, right? If you like, you could go a little bit closer in the money in situations like that. It's just, you got to understand the market's really going to award that consistency. If you have a system that works, there's no need to develop 20 different fucking systems. If you want to get complex and you really want to get complex and go as far as, okay, I'm going to adapt to the market's price action. I'm going to be like fucking water within the fucking market. However the fucking market's trading, that's how I'm going to fucking trade. You can do that. You're going to need a lot of intuition to do that. But you just need to understand how that affects, you know, the overall mind, stuff like that. Just some things I wanted to hit on in terms of adapting, right? But a key point is really just being patient and sitting on your hands and just waiting for those overall plays to come to you and waiting for the market's price action to come back on fire, rather than try to predict when it's going to happen, and combating it with times. You know, even if the market's slow and choppy, we're going to have extremely volatile times in a sense. So those are just some things that I wanted to bring ideas and awareness to. Like I said, if the market's slow and choppy, if you did want to, you could, you know, sell quicker, go closer into the money, scalp a little bit more, but don't let that throw you off the fucking course in terms of what you're known for doing best and what works best for you. You know, you don't want to, it's just, if you're creating all these different trading systems and all these different trading styles, that's where things can get a little bit complex and it can throw you off the overall course. But I'm telling you, having that intuition of just moving with the overall market's price action and adapting, that is going to help you a lot. And then when things start to change, just do less, observe, be patient. That's really what you're going to want to do. Do less. Don't do fucking more. If the market's saying, oh, now it's awarding scalpers who are just getting in, getting out for small fucking gains, it's rewarding them now. Well, don't go make 20 fucking trades like that. Just ease into it. But don't do too much, man. Just do what works best for you, man. And sit on your hands. If you want, you don't even have to. You can adapt in the sense of doing nothing. Okay, I have this strategy here. I have this strategy here. Well, I just want to use this one simple system. This is what works well for me. Well, it's not presenting itself. I'm just going to do nothing. I see something else that's working right now. I can dabble into it a little bit, but don't go doing anything crazy, man. Do what works best for you. That's just some things that I wanted to address in terms of market conditions, man. Because in terms of this year, March for 0-to-8 options, if you were going further out of the money, nearly every single fucking day, it was horrific, man. That was our worst month to date, was during March, because the overall strategy was just not working during March. The market was fucking dead. It was very, very slow. It was very, very choppy. And it was just rewarding people who literally just get in and out in fucking seconds. And what I'm saying is, man, when that happens, you must be aware and you must sit on your hands, be patient, be disciplined. If you want, you can try to adapt in the sense of, okay, I'm going to go a little bit closer to money. I'm going to sell for smaller wins. But it's just very important to understand, when you have something that works, just wait for it to start working again. Be observant, be aware, be patient, be disciplined. Wait for the market to present itself in terms of how exactly you want it to. Wait for it to already happen. Wait for the bull and bear traps to get created. You know, you might have to miss out on some moves at first. If the market's slow, you might have to miss out for it to come back a little bit on fire. But once it's back, it starts to come back on fire. So, just some things I wanted to bring awareness to, some tips, some tricks. Hopefully you guys can help use that in your favor. But yeah, man, if you're serious about you know, before I get into that, ANF, this stock right here, fucking phenomenal, man. Fucking, this is a great midterm option. I'm telling you, man, I've been telling you guys about this one since I've been telling you to buy the gap since 132.50. Look, man, it's bottoming at all the fucking gaps. All the fucking gaps. Every single gap. 131.70, 135.30. It keeps reversing at all the fucking gaps. It keeps forming higher support. And it's trying to spike back up. It's trying to fill the gap that's waiting to fill above at 166.80. If you're in midterm call options on this, you should do absolutely phenomenal, man. It's just bound to break above 150. When we break above 150, we're heading towards the 160s. That's a great midterm leap option. And then in terms of last week, I had a phenomenal trade idea on GME options. For those of you who watched the video, you should have been aware of this overall trading strategy, man. When you have this daily chart pattern, these patterns also work on other time frames as well, right? The daily chart is going to help dictate 1 day's worth of price action. 5-minute chart helps with 5 minutes worth of price action. You know, I prefer the 30-minute chart. It's a great balance. 30 minutes worth of price action is a phenomenal length of an overall trade, right? So for holding, and it's what works best for me. But you could see, man, when you have this candlestick facing to the downside and then this candlestick facing to the upside, this green-red pattern, next day tends to be very fucking bullish, man. I showed you that throughout past videos, and also the weekly chart helped a lot. I had this phenomenal idea on GME calls. We had people make 300% on that game plan. I told them just buy calls at market open. That's all you need. And then during the power hour on Friday, I went 3 for fucking 4, man. Every single day last week, I was just buying call options during the power hour, starting at Wednesday, Thursday, and Friday. In the last 30 minutes, I was bottom ticketing, making 100% profit returns, non-fucking stop, with the same exact strategy on the SPY's 30-minute overall chart, man. It was fucking flawless. In terms of these overall 30-minute patterns, it was the same exact pattern literally every single fucking time. But anyways, man, those are the plays and some updates I wanted to give you. Now, one last one is Zillow. Just keep an eye on Z. Keep an eye on Zillow stock here. If we gap up tomorrow, this can have a very bullish day. So keep an eye on Zillow. If we're gapping up, you're going to want to buy call options. We can go to 67 to 68 to 69 heading into tomorrow if we do gap up. So keep an eye on this as well, right? So more plays are coming, man. I'm keeping a close eye on Moderna, mRNA. I'm keeping a very, very close eye on that. MSTR, very interesting monthly chart here. Don't have too much to say at the moment, but this monthly chart, very, very interesting monthly chart. But yeah, man, I just got a couple stocks on my radar that I'm keeping an eye on. But the main ones, like I said, ANF, Zillow, and obviously you know, SPY. And then keep an eye on PLTR, keep an eye on NVIDIA as well. NVIDIA has a very interesting daily chart. If NVIDIA ends up gapping down, going bearish, it could sell off very nicely into this week. So just keep an eye on NVIDIA puts. If we are gapping down and reacting bearish, keep an eye on NVIDIA puts. But that's what I got to say, man. And like I said, this NVIDIA play, like I'm being for reals, man. What I'm seeing on the daily chart, under 118 to 119, we can flip super bearish and fill the gap at 113.50. Once we go to 113.50, I'm looking for call options. If we're not getting confirmations there, I'm looking for call options at 102.77. If NVIDIA is reacting bearish and we're gapping down, keep an eye on NVIDIA puts. Those are our overall game plans. Now, if you are serious about trading alongside with us, is going to be the first link down below. Within the description, you will gain access to a 0-date options trading alert system. 90% plus success rate. We're known for buying cheap, far, low risk, out of the money option contracts. We're known for selling them deep in the money for the biggest percentage gains within the market with the highest win rate in the game doing this. We've also created a unique trading alert system. In terms of what makes this system unique is we do not use stop losses. We do not use stop losses on the overall trades. The contracts are so cheap that you can put in your max risk per trade, even if you have a small account in a sense, you can put in your max risk per trade into the contracts. And if they go to zero, that's what you lose. That's the beauty of trading options. You always know what you're going to lose. Whatever you're putting in, your risk can go to zero. That's your max risk, right? So the contracts that we're trading, they're only 30, 40, 50 bucks, 30, 40, 50 cents, right? Multiply 100. Very, very fucking cheap. Very, very low risk. Lowest risk, cheap barrier to entry, right? So you put in your max risk per trade. If they go to zero, you lose your max risk. no stop loss needed. Now, there are times we just let the contracts expire, worthless, go to zero. There are other times where we just sell the move. If we're down 30%, if we're down 20, 30, 40, 50%, and it's just not aligning up, sometimes we'll just sell the move. But we never use stop losses. It's not needed. We're putting in our max risk per trade, right? So in certain situations, we'll sell the move. Other situations, we'll just let them expire worthless, right? And with that being said, we don't use stop losses. It's not needed. It's not required. We like to see how the trade reacts at certain levels to certain strategies as well. And we're putting in our max risk per trade, so it's not needed. We can just let them expire worthless. And we are known for holding them for longer periods of time and selling them in the money for the biggest percentage gains within the overall market. So we don't have a stop loss on, which means we can hold the trade for the whole fucking day. On SPY contracts, you can hold those during after hours. If you're using a real broker, you can sell those up until 4:15 p.m. And there's many big moves during after hours trading session. It buys you an extra 15 minutes of time for a big move to occur in your favor, right? Just some things to point out, because we've had some phenomenal trades that we make during power hour and we hold into the last 15 minutes, right? So just keep that in mind. You can do that with SPY, not with SPX. But anyways, we set profit stops. When we are up a little bit, so for us, a 5, 10, 15, 20% return, that's very small, especially when the market's more volatile, right? And it's not as choppy. Very small gains, 10, 15, 20%, very small percentage gains. We're known for making unlimited percentage gains. We're known for making the biggest percentage gains in the market, right? So very small gains. So what we do is we add to winners. When we win and we get a winning confirmation, we tend to add to the winners. So in most situations, we look to avoid adding to losers. Every once in a while, we'll do it. But we like to add to winners because when we're up a little bit and we get a winning confirmation, we tend to win big and we tend to continue to winning. So we add to winners. And then to protect our average cost, we set a profit stop. We set a profit stop to ensure we're not going to go green to red on a trade. If you set a profit stop, you can't go green to red on a trade. You get profit stopped out for a profit. If you set a stop loss, you get stopped out for a loss. If you buy far out of the money option 0 to 8 contracts and you're down 50, 60, 70, 80, 90% and you hold them and they go in the money later on throughout the day, you can sell for a win. But if you keep a stop loss on, then you get stopped out for fucking profit. If you buy something that's expensive, you need a stop loss because you can't afford to risk that fucking much. You need to size in big. And then in those situations, you're going to use up all your cash on your cash account because everyone knows if you want to fucking day trade and you're under $25,000, the only logical way to go about that is to use a cash account, right? So with these, you could size in small. You can make many fucking trades. And in order to day trade, you need to trade. You need to make many fucking trades, right? You should be making at least like 3 to 5 trades a week at the bare fucking minimum. 5 trades a week, especially if you're doing 0 to 8 options. But with that being said, man, that's just some basics that I want to share with you in terms of the system. And we move our profit stops up. So when we set the profit stop and the trade's working in our favor, the reason why we continue to move the profit stop up is because if the trade has a big move against us and we do not sell into the moves and leave runners, right? We want to make sure that we don't lose the bulk of our profits, you know? So you got to move that profit stop up. You could sell into the moves at key levels. And then if the market has a big move against you, you get stopped out for the bulk of the current move, not giving back the bulk of your profits, right? So just some things that I wanted to give you in terms of this overall system. So if you do want to trade with us, it's going to be the first link down below within the description. If you are serious about making money, I will see you guys within the chat tomorrow. We're going to absolutely crush it. It's the first link down below in the description if you want to get started. We have tons of members. If you're serious about making money, it's the first link down below within the description.